What's up, y'all? This is trade recap number 2. I didn't record the entry, so I apologize for that. I would like to, more times than not, when I post these recaps, actually have the entry. But you can see my executions on here, so these are my entries, that's my exit. I'll explain why I entered twice. Basically, after I entered, I'm like, I could technically still be about at that 1% risk. This is a 50K paper trade account, so I'm risking 1%, that'd be $500, right? I could risk $525, so it's a little more than my 1%, but again, it looked like such a good setup, so I was willing to risk $25 more than my 1% on this trade, because after I entered, I'm like, yeah, this is a really good looking trade. We were holding all these support levels, so let me break it down. We're gonna go top-down analysis on this. I'll tell you exactly what I saw going into today. So basically, to get my daily bias, I use the next day model. TT Trades on YouTube, he talks about it. So what are we doing? So first of all, we need to look at yesterday, right? What did we do yesterday? We took the day before yesterday candle lows and we closed above, meaning that I expect this day's candle highs to get taken for liquidity now, because if we were going to continue bearish, we wouldn't have held. First of all, there's a 4-hour fair value gap here, so we wouldn't have held that fair value gap. If we were bearish, we likely would have closed below it or closed some point within it if we were bearish, and we would continue lower. And also, we wouldn't have closed above this prior day low. So anyhow, close above. I'm expecting prior day highs to get hit. So market opens, we're down here, and let me drop down to a smaller time frame so you can see. So like I was mentioning, 4-hour bullish fair value gap got respected again. So if we were bearish, we wouldn't have respected it. We would have continued lower, closed within or below it. So I'm expecting prior day highs to be targeted, which is this level right here. Let's drop down even more. Let's go to the hourly. So pre-market, I noticed this. Bearish fair value gap, but it gets inverted. And this is like an hour and a half before open. So again, very bullish. So I have that marked out, inverse fair value gap. Market, if it was really bearish, it would have respected it and would have continued lower. We didn't. So it's telling me the drawn liquidity is higher. Let's go to the 15-minute. 15-minute chart. What do? We form a bullish, so 3 candles here, this wick, and this displacement here. A bullish fair value gap on top of an hourly inverted, and then above all my 4-hour fair value gap, above all the support, targeting prior day highs. That's what I'm thinking. So I see all this bullish confluence. Let's go to the 1 minute. So on the 1 minute chart, again, you can see that displacement from the 15-minute, but again, you can see even a little bit clearer on the 1 minute chart. That was the displacement. And then what we do, so market opens, we manipulate these highs, and then, so accumulation, manipulation, and then distribution, but we distribute into larger time frame bullish structure. So again, my larger time frames are bullish, so this is kind of noise to me. What I want to see is the corrective move upwards towards prior day highs, which is just upward liquidity, because overall on the bigger time frames we are still bullish. Again, it's important to remember the big picture, and I remind myself of this because I make mistakes too, and I'll zoom in too small. Zoom out, look at what the bigger time frames are telling you, because those are going to hold higher significance, and those are going to be the bigger picture, the larger story at play, right? Larger story saying we go higher. So I find an internal model or a smaller time frame model that supports that thesis. So again, I want to see higher. So what do I want to see? Bullish structure on a smaller time frame. So what's that bullish structure on the 1 minute? We tap into larger time frame bullish confluences such as the hourly inverted fair value gap, and we tap into the 15-minute bullish fair value gap. And so now I'm looking for some sort of entry model. And that's going to be either a market structure shift, change in state of delivery, which you got later. You got those entries later, but the earliest and best entry that I saw, especially based on people in the PB trading group Discord, which I'm a part of. Again, I highly recommend, if you start trading, find a community where you can talk to people who are pursuing the same thing, because you all learn together. That's why I'm making videos, so I can learn from people in the comments, or I can get feedback, or you can learn along with me, because we're all learning. This is a journey together. That's why I'm sharing it with people. I'm also just like a big yapper, so I like sharing things. I love talking to people, especially people with a similar interest. So putting that out here. Feel free to comment below and just like let me know what you think of this trade or any questions you may have, or anything you're struggling with. So we have a market structure shift here. You have this high, and then this gets closed above, gets displaced through, actually I should say. So we create a bullish 1 minute fair value gap on top of a bullish 15-minute fair value gap on top of an inverted 1 hour fair value gap, and this is just bullish on bullish on bullish support. So I enter the 1 minute, and you can see that was my entry, the 1 minute fair value gap, and then my stop is below the fair value gap candle, because we don't have a swing low unless I wanted to make my risk really big, so it's tighter. It's right below the fair value gap candle, not below the fair value gap. That would be like right here. It's below the candle. And then I enter, and I'm like, this is a really good setup. So I enter one more contract, risking $525, and then TP is 3,000. So risk $500 and make 3,000. It's a good risk reward. So I enter 2 contracts. I go break even at this high, because this is so far this day's high, intraday high today. So I go break even here. We rip through it, and then we sell off aggressively. And on this candle right here, we tank. But again, candle wicks do the damage, and the close and the body of the candle tells the story. So we're holding. I wait for the close. We hold at this price. We did not tank. We did not get a bearish close. We held. So I'm expecting, as long as we hold price above this bullish candle, essentially, as long as we hold above this bullish candle, or I guess you could almost refer to this as change in state of delivery if you close below this one bearish red candle. You could consider it change in state of delivery. Again, I'm learning all these concepts, but as long as we got a bullish close, I was still bullish, which we got. Stops to break even, so I'm not gonna lose anything on this trade at this point anyhow, so I'm fine. So anyhow, I'm waiting for close, bullish close, bullish close. What we do, we go and approach these highs. I'm expecting to get taken. A little bit of patience, but 5 minutes later, boom, we hit my initial target of previous day high. $3,000 in the bag. That would be passing a funded challenge. You need 3,000. Like if you have a 50K, your target is 3,000. Granted, I think scaling rules might prevent me from taking on 3 contracts on this trade. I think until you're up 1,500 on the balance, you can't add more than 2 contracts, but still 2 to 3 trades you pass the account. So that was trade number 2. I know I rambled a bit, but like, you know, I'm a big yapper, so the more of these I do, the more live trades I'll actually catch, and the more straight to the point I'll get. But I just want to share my story a little bit, help y'all out, kind of just walk along with me and learn with me. So I hope you enjoyed the video. More trade recaps coming soon, and y'all have a great day. Peace.